Why are EV stocks going down? Okay guys, so I decided to make this video because I was reading the comments and a lot of you guys were talking about how you've been up on some positions like NIO and Solo, Chargepoint, and now these stocks are basically semi-correcting. So right here, if you take a look, I'm using TradeView. I have a couple of stocks on here, and the reason I like TradeView is because they have this tab here which is called Compare, and you can kind of put multiple stocks on the same chart. So as we can see here, we're taking a look at several companies. So this line here is NIO, and then we're also looking at Solo, Arcimoto, Chargepoint, and this the one the highest price here is Xpeng, XPEV. So as you can see here, all of these stocks have been selling off lately. So there was a huge kind of EV stock bubble, or EV stock pop, as you would say, where a lot of these stocks, ran up to ridiculous prices, and now we're seeing a lot of investors take profits, and you're seeing a lot of that money move into more so Dow Jones stocks. Dow Jones has recovered quite nicely, and big tech. So a lot of stocks like Google, a lot of stocks like Netflix, even Tesla. A lot of that money has moved into those big tech stocks. So I'm going to give you guys a quick heads up on what I'm personally doing. Like I said, make sure you do your own due diligence. You really need to figure out exactly what your long-term goals are. So a lot of people are kind of looking at this price correction and they're panicking. I was reading some of your guys' comments. You said you were up like 200 or 300% on some of these stocks, and now you're only up 150%. Well, like I said, with this situation, I'm going to give you guys a couple of key points to think about. So the first point to think about is, what are your long-term goals? Because, there's an old saying where, if you're riding a boat, there's going to be, waves and, turbulence, and it's not going to be a straightforward journey if you're taking a boat from one place to another. So just remember that there's going to be ebbs and flows. There's going to be, days where you're up, and there's going to be days where you're down, but as long as you get to your long-term destination. So what I'm saying is that basically the EV revolution isn't going anywhere. There's always going to be, gap ups and gap downs. You can't expect stocks to just go straight up. So as you can see here on a lot of these charts, the stock price had, almost doubled or tripled, sometimes even quadrupled in a week or two. And that's just not sustainable. Stocks will never, go up in a straight line, because business activity doesn't go up in a straight line. So I think the most important thing to realize is that stocks are a part of a real life business, and you're going to expect days where the stock price goes down. But it really depends how you look at it. So me personally, I see down days as a dip buying opportunity. It's really important to really see stocks as a part of a business, and that if the price comes down, it allows you to accumulate shares at a cheaper price. So like I said, if you take a look at any stock, over the long term, you're going to see, peaks and valleys. But the important thing is that overall, the business activity and the business itself is moving in the right direction. So if you take a look at the EV industry right now, this was an explosion in sales, and not just because of the pandemic, but the fact that all governments are requiring vehicles to be electrified. Most governments, European governments, China, the United States, with Biden's, electric goals and things like that, governments want, to reduce carbon emissions, and they want basically, all electric vehicles, even in India. So by 2030, 2040. So that's the direction we're heading into. You're still going to see an explosion in electric vehicle sales, and there's going to be a point in time where you won't even be able to buy, basically, there's going to be a time where you're not able to buy an internal combustible engine vehicle legally. So this is just, once again, we're in the first inning here, and this is just simply another dip buying opportunity personally. So if we take a look at these are some of the more popular EV stocks out there. We can see that NIO has actually crossed below its 20-day moving average. So I expect some of these stocks to potentially dip a bit lower. So now a lot of people are thinking, oh, maybe I should have sold at the top. Well, there's a couple of implications there. The first implication is tax reasons. So anytime you earn a profit on a stock and you sell it and you don't hold it for at least a year, you're going to have to pay short-term capital gains tax. So, if you really want to kind of maximize your portfolio and maximize your wealth, you want to minimize taxes as much as possible. So by holding a stock for at least a year, you're able to sell under long-term capital gains tax. And depending on your tax situation, and if you actually, need help, you can always sit down with a CPA. That'll kind of help you minimize your tax implications, because that's one of the biggest eaters of wealth that's going to really eat into your portfolio gains, is paying a lot of taxes. So me personally, I really don't like selling stocks at a profit. You're going to do best by holding stocks over the long run. So not just holding them for a year or 2 years, but 5, 10, 15, 20 years, even into your retirement, especially if you have dividend stocks. So with these EV stocks that are going down, this is simply an opportunity to add more, because, for some reason, markets are driven by greed and fear. So now stock prices in these EV stocks are kind of going down and people are getting scared. Maybe even some people are down. If you kind of bought at the top, let's say, you bought NEO or a Xpeng when it was 70 and now it's at 50, or you bought NEO when it was 55 and now it's 45. So there's a couple of things. Now, if you're swing trading, you probably need to get out of a lot of these positions, because if you're not investing long term and you're just swing trading because you think the price is going up, you should always use stop losses and get out of the trade. But for me personally, especially the stocks that I hold personally, so stocks like Solo and Chargepoint, and a stock like NEO, which I've been looking to get into because I posted videos about NEO when it was $2, and I just sold so early. I sold at like $7 or $8, and I haven't had a chance to get back in. I'm excited because these stocks are finally coming a little bit more down to earth, and they're allowing me to acquire shares much cheaper. I mean, it's basically like a Cyber Monday sale for EV stocks. So it really depends what your perspective is. For me, I'm excited to see some of these stocks come down because I know that I can buy them at a cheaper price. And I'll give you guys some personal kind of experience that I've dealt with my portfolio. I've seen this before. So as my portfolio has grown over the last 2 years, I've seen a lot of dips. And at the point in time, if I think back in the past, like when I saw that dip, I kind of panicked. But almost every time there was a dip, the portfolio ended up rocketing higher. And when I say higher, I mean substantially much higher. And that's just the nature of the stock market. If you take a look at, long-term charts of markets and things like that, in the long term, markets always end up. And that's because economic activity is going up. There's, populations are going to continue to grow, and economic activity is going to continue to expand. More people are going to purchase more products and services at higher prices. So over the long run, stock markets are going to be higher. We don't know when they're going to end up higher, but they're going to end up higher. So like I said, for me personally, I would definitely see this as a buying opportunity. You've got a lot of stocks on sale. I mean, if one of the ones that I'm looking at especially is Solo. So Solo at one point, I think it was even around $12 or $13. That's on sale. Chargepoint is now dipped below $30, and with the merger that's going to be completed on December 15th, a lot of people still don't know what switchback energy is. So guys, this is a nice buying opportunity, I think, and I'll definitely be doing a lot of EV stock buying during this week, as some of these stocks I think are on sale. So long term, I think we're still maintaining a bullish outlook on EV stocks. Don't worry, this is just kind of a, it's like you're getting on a plane and there's turbulence, but there's going to be turbulence until you get to your destination. You're never going to get on a flight and not have a little bit of rockiness, because that's just part of the game. So like I was saying, if you're swing trading, you might want to get out of some of these stocks, because we could see lower prices. As you can see, a lot of the sell-off has been ramping up. But if you're long-term on EVs like me, you know that we're going through a transition. You're going to welcome lower stock prices. You can add to your stakes, and these positions will be worth a lot more in the future. So I hope I give you guys some clarification on my personal thoughts on kind of why EV stocks are going down. I say patience is a virtue. I keep reiterating this on this channel because I think it's really important to think about. So that's it for next time. That's it until next time, guys. Please smash the like button if you enjoyed this video, and please smash the red subscribe button to subscribe to receive more updates from my channel. And if you want to see which stocks I'm watching every day, just click the link in the description, or you can check out my daily stock newsletter, investortrip.com/newsletter. So that's it until next time, guys. Take care.